Recent trade deals that India signed with the US and EU is not just about tariffs or supply chains. It's a signal that the world is quietly but decisively moving away from the old global order into something new. To understand what this means for India and for our investments, we need to rewind almost 80 years. After the World War II, the United States emerged as the undisputed economic and military superpower. To stabilize the world, the US helped create global institutions. For example, institutions like the World Bank, the IMF, and later the GATT, which eventually became the WTO. The idea was simple: the US would anchor a system, trade would be free, capital would flow, the global growth would be driven by rules based globalization under the US hegemony. At the heart of the system was the Bretton Woods Agreement, where the US dollar would be pegged to gold and other currencies would be pegged to the US dollar. In effect, the dollar became the spine of the global financial system. Now, in 1971, what happened was that due to persistent inflation at that point in time in the the US decided to unpeg the dollar from gold. So, which means the Bretton Woods Agreement was revoked, and the US dollar became the pure fiat currency of the world. So, almost all world currencies were pegged to the US dollar, and it was removed from the gold standard. But still, the dollar remained the predominant global reserve currency because the world still trusted the US institutions. It trusted the US markets. It also knew and believed in the US military might. In the 1980s, the Plaza Accord further cemented the dollar-centric system and reshaped global trade flows, especially helping countries like Japan and later East Asia to become export powerhouses. Then came 2008. 2008, we had a massive global financial crisis. To save the global financial system, the US and other Western central banks, they printed unprecedented amounts of money. They could do that because there was no gold peg, so they could print on their whims and fancies. They cut interest rates to near zero and used quantitative easing on a massive scale. This kept the system alive, but it also debased currencies over time, inflated asset prices, and quickly weakened trust in fiat money, including the dollar. The world started realizing that the old system was financially stretched even if it still functioned. Now, another prism to it is China's emergence as the leading economic power and the factory of the world. When China joined the WTO in 2001, it plugged itself into the US-led global trading system, but with a completely unique model, which was state-backed capitalism, cheap labor, massive infrastructure investment, and strategic protection of domestic champions. The West provided the capital markets, the consumer markets, and the demand. Over time, China became so indispensable to the world. If you look at it, initially it was Japan in the 50s and 60s, probably in the early 70s. Then it was Taiwan, and later it was Korea. Which all these countries took advantage of the large consumer market of the US and the Western world. Now, in the current scenario, China became the factory of the world, but it also created a lot of strategic dependence, supply chain fragility, and geopolitical tension. Now, the world realized, or the countries realized, that it is not helping them to have reliance on a one single nation. And now countries started moving away from the global order and into their own silos. So today we are seeing the consequences on a single country backed system, like trade wars, technology restrictions, friendshoring and nearshoring, and the new US, EU, and allied trade frameworks. So this is not deglobalization. This is reglobalization with geopolitics. The world is now reorganizing into large democratic blocs with trusted supply chains and strategic industries being pulled closer to home or to friendly nations. So, this is where India comes in. India offers scale, a large democratic market, a large domestic market also, strategic alignment with the US and the Western Bloc, and improving manufacturing competitiveness. As global companies look to sort of de risk from China, build resilient supply chains, and diversify production, India becomes a natural partner in this new world order. So, whether it is electronics, whether it is semiconductors, whether it is chemicals, whether it is pharmaceuticals, whether it is industrial manufacturing at scale, India is no longer just a back office to the world or a software giant that it already is. It is becoming a strategic production hub for the world. So to conclude, what is in it for the investors like you and me? So when you see the US and EU trade deals, also we have signed deals along with the US and EU. We have signed deals with the UK. We have also signed deals with the Arab nations. Don't view them as short-term headlines. They are actually chapters which are much bigger. It is part of a larger story. It shows the evolution of money, the reordering of global power, the rewiring of supply chains, and the emergence of India as a key pillar in the global system. So in the erstwhile WTO, the WTO principles were actually made for the Western world, and India had to play along. So now these are specific FTA agreements with specific countries, wherein which our interests are also taken care. So we are in for very, very exciting times ahead.